probable depression. Yeah, it's a heck of a thing. Gold is the antithesis of all of that. The anti-dollar, the anti-fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt. Gold is that trade that is the big winner. And as it stands and moves, so its sisters and siblings will move like silver and platinum amongst them. And that's where we are, and it is a debt-based collapse.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
The financial system is based on a debt fiat. It's the foundation system, and it's in collapse. And it's not just in collapse in America, as you pointed out, but it is, unfortunately for Americans, the privilege of the hegemon also means you fall from a higher stepladder when it comes to that. So everybody will be hurt, and America will be hurt badly, probably the worst, but Europe is not going to be far behind, neither the UK. It's particularly the Western world. And then even the rest of the world that isn't in the Western world will be affected by major buyers disappearing, and so we're talking global probable depression. The fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt. Gold is that trade that is the big winner. And as it stands and moves, so its sisters and siblings will move like silver and platinum amongst them. And that's where we are, and it is a debt-based collapse. So don't get sucked into one of the narratives that say, well, trying to trade a blow-off in stocks. In gold ounces, both the NASDAQ and the S&P and the Dow Jones are down despite making nominal new highs since the trade tariff collapse. And in fact, the final high, and it might be worth the chart share just to put a proper nail in this vampire's heart and put an end to, that story, properly put Dracula to death on that one, is if we take and do the very charts for you. Let's take the Dow Jones Industrial, for example. It's a popular one. Everyone will say, yeah, but all-time highs, all this narrative. Everything should be measured in gold ounces in a fiat repressional collapse period. There is no sound money when they're all in the fiat system. And that's what you have. The high for the equity market culture is here. That was peak equity. 1999 was peak equity. We're talking a localized high previous to the current stock market's highs that you're making now. That was gold at 256 ounces and the NASDAQ.com boom. You corrected substantially there, and we started to have gold at 1,000. Then gold slowed down a little bit, it went right up to 1927 at this point. Then it came back down a little bit, and they reflated a bit of a NASDAQ bubble. As you can see, I have an inverted setup structure for downside here, which is saying in gold ounces, the Dow Jones is heading down. And it's the same for the S&P and the NASDAQ, despite NVIDIA, despite all the things you say. So stay with the core winner, because everything is a monkey on a grease pole sliding down. And it might go up, but in real terms, it's monkey go down, because I'm kind of the charts guy. It's what everybody who comes to expect. We trackers, and we read the footprints in the sand, basically. That's our primary goal. So we just had an amazing run. Our community and I were aggressively leveraged long here. So we are investors, but we also try add a bit of extra spice on that by getting leveraged long. And we got leveraged long in and around the 3340s, 3350s, 3360s with multiple entries. And you have just made a key technical target for us at the 3,769. This is our bespoke favorite setup. It's called the HVF setup. It's a squeeze in volatility. It's the Hunt volatility funnel method. And this is what we love to trade. And in bull markets, you consistently get them. So it's a very useful way to turbocharge your stacking providing you can implement safely with real stop losses, and the hyper over symmetric, the asymmetric gains, you accelerate your ability to stack. And this has got a lot of our community members who are banking over 6 digits, one or two more. Others at lower levels are making just good profits for the first time in trading. I'll just highlight. So here was the run. You made our interim target there. That's your point of rest. You got a red candle there and a pullback. Then you went into this broadening structure. Many people see that as weakness. And in actual fact, when you are inside an HVF play zone, which is after this triggering point on the green line and waiting for target, it's actually bullish. You popped out the top, and now you've done that. And these two candles, a little bit of a wick sell here, you can see back down, and we've got a red candle also with an upper wick sell. So a little bit more sideways and possibly down now for a spell before opportunity. So if you were just about to put $1 million into miners, you might get them priced a tad cheaper if you're patient. But don't stop getting those miners, don't stop getting that gold, silver, and platinum. But from a timing perspective now, we expect progress decay. That's what a target's meant to be, a localized high where you get a rest and a little bit of pullback. And you often create new structure. So an example of what could happen, it's just one of many. It's not a prediction, by the way. You could come down a bit, you could swing about a bit, you could come down a bit, you could calm down, and then some data comes out, and then you go again. So for those that are stackers with physical, there's no action to take. For people that are more trading with CFDs and things like that, you might want to bear a bit of awareness to that. Also, everybody's become super bearish the dollar, and we were too, and we were right to be. But there's sign that the dollar against the other fiats and even here on gold will have a little bit of pushback. I'll just highlight the monthly. You can see how the dollar has underperformed relative to the euro, another failed fiat, of course. Let me just remove that. Sorry, that box. We don't need that. It's jumped on. You can see how you've had over the last few months. I mean, literally, this is January, February, March, April, May, June, July, August. I think I started, that should be January, so forgive me, I started one after. So we're in the September month now, but you can see we've sold off there, and that's a little bit like a shooting star, and most of these were big, stretchy upside candles with deval of the dollar, up valuation of the euro, which has all of the same problems in many senses. A lot of people are more familiar with the Dixie, which is actually the same thing but upside down a little bit. It has a bit of Japanese yen, Swiss franc, and Swedish krona in it to small degrees, but it's 52% still the euro. And you've had a little bit of a reversal after making a marginally lower low and coming back up. It's too much. It's only one swallow. We don't call a spring or a summer on that. But this was very capitulative. And there's a possibility that, a little bit of a rally and a little bit of comeback of the dollar might be on the cards, because a lot of the other trading nations that have surpluses to the dollar, mainly China and the Eurozone, you would have had quite a lot of a correction on importers with a combination of the tariffs and the currency effect already. And they'll be squeaking about currency manipulation soon if the dollar continues to go down and they can't sell to any meaningful level anymore. So that's a kind of small time frame, medium time frame, technical perspective. It's not the time to rush in and get leverage long now that everybody's super excited about it.
Based on fundamentals, Francis Hunt argues that powerful forces behind the financial system will never allow gold to return as real money. Instead, he says every new technology, whether fiat, Bitcoin, or CBDCs, is another proxy. Hunt warns that this trust has already been badly eroded, exposing the fragility of the system. Francis Hunt points to a massive opportunity with long-term targets near $330 and a nearer milestone around $100. Hunt emphasizes that while gold may guide its pace, silver's setup signals one of the most significant breakouts in decades. In the last 5 years, silver and gold have shown different paths. Silver's price has been more volatile, with bigger potential gains. Examining annual returns from 20 to 24, silver outperformed gold in some years. This was due to industrial demand and tech advancements. For example, in 2022, silver's return was significantly higher than gold's, largely due to its increasing use in renewable energy. Let's get back to the interview.
The people that are orchestrating this system behind it, the dark forces, names you don't even probably know or that you might only suspect, are never going to give you your own money. And gold is a keep you honest system. They don't want that. They entrench their power by virtue of controlling money supply, and it's not one they intend to give up. So the typical game is they install. I was listening to somebody, and he was making the case for Bitcoin and why my criticism of his Japanese imaginary friend superhero that came to save him with the Bitcoin creation is a false construct. He said, well, it's the first time and this is happening for the first time. And I go, no. And they tried to bypass the value of base money, gold, onto the fiat. And that was new technology. And it was crazy and it was amazing. It was basically blacksmith's IOU notes, the big guys that shoed the horses, who were holding more gold than anybody ever up at one time and could dish out more IOUs than there were gold. And that is always, a fractional reserve system is always the intention to maintain. And Bitcoin and CBDCs are going to become the new, but but it's technological, it's more convenient, all of this. That's the new derivative fiat. Hence, fiat comes from a faith-based system. We say that note is worth a certain amount of hamburgers or meals or potatoes because of everyone accepting the price for that good and that note being passed around will secure you it. The problem is the faith has been undermined. The debt is collapsing, too much fiat, and we're at the end of such a cycle. And part of their job to rinse, repeat their continual scam is to get participants to develop faith in some new derivative proxy rather than the original money. And that's where CBDCs come in, and I think they will be doing it and clean white paper as easily available. And fiat note was a wonderment. It's beautiful and an IOU, and it's backed by your government and backed by this. Don't put your faith in the same criminals because they will sell you the same scam, just with a different